Good morning, guys. Cav, I didn't have any challenges with Ninja this morning. Um, was it Apex? Was it Top Step? Was it the data maybe that was going through? Because typically, Rhythmic or Tradeovate. Rhythmic, that's one of the biggest challenges, is not a lot of people are doing Rhythmic anymore. Good morning, Miss Jen, or good afternoon. Good morning, Bob. Steve. Cab, I don't know. I would go back. I would take a picture of your orders in place. I would send them over to Apex and see if they're willing to work with you. Maybe if it was, I don't know. I wish I had answers for you. I just don't. Um, Jerry, rollover's automatic. All you have to do is click yes. So let's talk about rollover first, guys. And let's make sure everybody's where they need to be. Good morning. Who else? Erla. It's so good to see you guys today. Alessandro, great to have you. Let me open up some pictures here. So we'll do this. Where's my rollover picture? So one of the things, everybody got the, hey Doug, everybody got the little text box when you opened up NinjaTrader today. Man, Iron Mike, there were just less people having problems with Tradeovate. I hesitate to say whether it's better or worse because not everybody has trouble with it. But the consensus is that Tradeovate data seems to be more stable. When Apex has trouble, it's not as often with Tradeovate. What were the errors, Jerry? Do you have a picture of them maybe? Maybe I can help. If not, Jason will get you all squared away. Let me see what your error was. If you don't mind, I'll try to help for sure. Wow, I love it. You have it on the ready. Okay. So this isn't an error in the rollover so much. What this is, Jerry, is over the weekend, NinjaTrader has data issues. It's not like an issue. Has something to do with the close and all that stuff. It isn't the rollover. But almost every Monday morning, I have to right-click on my chart and reload historical data. And what it does is it just kind of recirculates and freshens up and makes it good. If you want to try that this morning, right-click on your chart, hit reload historical data. Monday mornings, more often than not, that right-click and reload all historical data. This fixes it 99.9% of the time. If you want to give that a go, let me know if that works. And I think that's one of those things, okay, now I've done this for a couple weeks and now I always know to do that. I always anticipate doing that on a Monday morning. So guys, contracts rolled, and this is one of those times where they all roll. NASDAQ, ES, and crude, guys. So whenever there's the roll, I always create a market analyzer. It's just, if you look at NinjaTrader, hold on. If you look at NinjaTrader, it is new, market analyzer, and then it brings up this window. You load in the template for the market analyzer. There's only one choice. And then you can drop your different markets in there. So what I do is I check the volume. Anytime it rolls, I want to see what's going on. So NASDAQ, the new contract is running less volume than the old contract. So I'm going to keep the NASDAQ on the 325 contract, probably till tomorrow or the next day. Crude oil is dead split, and the S&P is way ahead. It's double. So I do this anytime there's a contract roll, and I say to myself, all right, I need to be on the O3 with the higher volume because it's going to be a smoother market. And when crude oil is split like this, guys, when it's 50-50, I get on my toes and I'm ready because the volume is half of what it normally is. They're dividing it between the two. So it's important to me to be aware that it may not flow as smooth as possible. So for those of you that are thinking of rolling, at last check, the volume was heavier on the old contracts, NASDAQ, S&P, and it is 50-50 on crude oil. And there's our S&P right there, and I am on the March contract still. If you have any questions about that, throw them in the room. And then next, talking about things that could create a less than ideal market condition. Guys, news. There was some high impact news at 8:30 a.m. this morning. There was that medium impact news. And if you were watching the market, it bounced. It hit hard. It totally took off, changed directions. I check news every morning. I go to forexfactory.com/calendar. My personal trade rules say do not trade into high impact news. It's not worth it. There's too much indecision, too much emotion. And guys, everything I do is a pattern. Everything I do is a pattern. It's a pattern that is identifiable, it is definable, it is repeatable, and it has been proven to win more than it loses. And that's why I take trades, and that's what we're going to talk about over the next hour. Everything that I talk about comes from the Nexgen page. All of the answers come from the trading guide. Guys, I'm going to give you everything that you need to be successful with the software. I'm going to do my best not to confuse you or overwhelm you. I'm going to give you the most basic, highest probability approach to learning this software that I've ever taught, that I teach every day. So if I go to the frequently asked questions, and I'm going to scroll down, close your eyes if you get motion sickness. We're going to discuss a high probability trade today. We're going to talk about a high probability trend trade. This trade is your first trade. This trade is the trade that teaches you to read your indicators. This is the trade that typically wins 70 to 80% of the time. That success rate creates an awful lot of confidence. And guys, this is the trade that I'm watching brand new users commit to, learn the very basics, and they're finding more winners than losers. And that's exactly what the hope is for you guys. So we're going to focus on this one. Because this high probability trend trade is the one that teaches you to read your indicators. Well, it says liquidation only. Contract is about to be expired. Please contact the trade desk. So this is crude oil. That's the April contract. I'm not sure why you're getting that error. It's letting you know that the contract is about to be expired. I don't know. It's for whatever reason, I don't know what's going on with your accounts, Alexandro, or what your settings are or what you're doing with Ninja. But maybe if this is a live account, maybe they're telling you, hey, you can't get into a position yet. Maybe you don't have the funds to hold it or something. I'm not sure. I would reach out to Ninja. But usually anytime it's liquidation only, something's going on. To where there's capital restraints and they don't want you to enter another position. And I don't know if that was prop firm, live account. Sim account should never throw that. But I don't know, when Ninja says reach out, go ahead and reach out, let him answer it. Because then it's not so much a maybe, it's them telling you. So guys, we're going to focus on this high probability trade. And we're doing it, and I said it, and I'm going to say it again, and I'll probably say it 80 more times before it's all over. It's just going to help you read your indicators. It's going to give you the ability to look at your charts, to identify some advantages, to recognize the pattern that's been proven to win more than it loses, and know whether or not you have the advantages that you need to enter the market. You're going to find when you start focusing on the reads and the advantages instead of the money that you want to make, that 90% of the typical day is spent reading indicators. There's a lot of waiting in day trading. There's a lot of doing nothing. For me, there's a lot of YouTube off to the side or video poker, practicing my putting in my office. Anything other than just jumping into the market. Because I wait for my rules to be met, guys, and that's the key, and my chart reading is going to let me know. But once you get good at chart reading, there's some concepts that you're going to become really good at really quickly. And you're going to understand where the market is likely to continue. This likely to continue spot, this is actually your entry for the highest probability trend trade. This is going to be your entry for really any trend trade. And what happens is you start looking at your charts and going, man, everything says we're going this way. It's probably going to bounce, and that's where it's likely to happen. And that's what we do every day. You're going to understand where the market is likely to go. This is going to help you with profit targets. And you're going to understand where the market is likely to stop. This is going to keep you from taking that last trade, because likely to stop areas, we call them termination conditions, can absolutely stop a trend. And it's pretty cool because you really will start to speak to yourself in this, well, this is where it's likely to go, and this is where it has the potential to stop, and you'll begin to respect it with a little bit of study. The high probability trend trade, guys, it's only 3 rules. I actually had a phone call once where someone told me that wasn't enough rules for a successful plan. And I chuckled a little bit because it really is. This high probability trend trade, it only takes 3 rules for that pattern to be met. And these rules describe the pattern. I feel like I want to focus on that word today. Pattern. It's just a pattern. It's something that the market does every day. This describes it. And the pattern is that the large chart has strong trigger lines. And when that's true, I have the advantage of momentum. And the pattern says don't trade into a termination condition. And when that's true, I have a clear path. And the pattern says get in where the market is most likely to continue. And when this rule is true, it defines that point. That's my entry. So the recipe for a trade is momentum plus path plus entry area. And if you say this out loud every time you're taking a trade, I have or I don't have. If you say, I have momentum, clear path, and entry area, your rules are met. That's your trade. Take it. Enter. It's been proven to win more than it loses. And if you say, well, I have clear path and an entry area, but not quite momentum, then all that is, it doesn't mean when you grow with the software, you can't ever take that trade. It means you know something's missing. One of the good things are gone, and you'll manage a little more assertively. So these 3 rules, they come to be on only 2 charts. There's a large chart and there is a small chart. Your large chart is a very broad stroke of a brush. It's a slow moving chart. It's difficult to see change, and it's going to kind of show you the overall opinion of the market. It's going to show you what's happening, the big picture. It takes the first bar on the large chart to give you that information. And through the first bar, you're going to have rule 1 met, that advantage of momentum. With only that first bar, you're going to have rule 2 met, making sure you have a clear path. So we're going to let the large chart lead the way. You're going to let the large chart define direction, momentum, and areas. When the rules are met, there's an important phrase. When the rules are met on the large chart, I'll turn my attention to a smaller, faster chart. And this smaller, faster chart is a refinement chart. It takes that very broad stroke of a brush. It shows the inner workings of that 1 bar from the top of the bar to the bottom of the bar. On your small chart is typically 20 to 30 bars, and we use that to pinpoint exactly where the market is most likely to continue. And by refining that 1 bar, it helps reduce risk a little bit. It does help increase profit potential. That's what rule number 3 does for you. We use the 2 charts because they're very much a reflection of who's in charge and who you should be trading with or who you're trading against. And the large chart is the large crowd. It's the men and women that wake up with all the money, all the influence, they're charming as all get out, and they say, you know what, let's make the market go up, and the market does. And they say, let's pump some money in there and create momentum, and the market moves up fast. And these are the same people that say, hey, look at that big red line, the same one Nexgen users are looking at. What a great place for profits. Let's make a decision there. And the large chart is going to tell you everything you need to know about whether or not you should be looking for a trade. Let it lead the way. But your small chart is like this small crowd, and they've got a lot of wealth and influence as well, but they like to create little shoves. They like to poke the bear. And they create these small retracements. Like everything says up, and these guys try to make it go down. Well, their efforts fail typically 70 to 80% of the time, whether that's by design or just simply getting run over by the large crowd. Rule number 3 uses this fight, and it identifies exactly where the small crowd is most likely to fail. which is where the market is most likely to bounce, likely to continue with the underlying trend. So large chart leads the way. Small chart is nothing more than an entry chart. And guys, this is what we're going to do this morning, and this is what we do every morning. And I firmly believe that repetition creates recognition, and we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. You guys are going to simulate, practice, make mistakes, have victories, but the key is you're going to post those trades in the room, guys. Every time you take a trade today, or even more so, every time you look at your charts and you're just not sure what the hell's going on, take a picture. Write on the chart. If it's a trade, I want you to tell me why. It's such a key phrase. Tell me why. Why did you take that long trade? Talk about those advantages. And what you're doing is one, you're policing yourself. You're talking about the 3 advantages to create the trade. You're pointing them out on your chart to me to make sure that your chart read is accurate. You're showing me your entries. You're showing me your exits. But when you write the why, you're literally creating a recipe for success, or you're creating a recipe for avoidance if you're making mistakes. So guys, don't bypass this part of it. This is the first step in becoming a confident trader ASAP. We're going to simplify a lot. I'm going to give you 2 trades on a rock solid plan with management for both. You've got to learn what looks you're going to commit to. And that's the second piece of the puzzle. Using the spreadsheet that I give you guys every day, that I'm about to give you right now. And guys, this spreadsheet is really multi-purpose, if you will. The spreadsheet has 4 tabs. The first tab is the core, momentum and path. This is your foundation. Once these 2 are met, there's a million ways to find entries. So this gives you pictures of strong triggers and weak triggers and clear path and terminations. And I'm going to give you a little something so you learn how to study this. But I do this because it's important to know the difference between the 2. It's important to know when your rules are met and when your rules are not met. And I dropped this in the room for Bob. And it's really for everybody. So those of you that live in places without a lot of snakes, you may not get this one. But there's 2 snakes in nature. There's a coral snake and a king snake. And they look almost identical. But one is red and black, and the rhyme is it's a friend of Jack. This one will not kill you. It's cuddly, doesn't matter, pick it up all day long. But there's one that is red then yellow, and it'll kill a fellow. And they're so similar. One is rules met, it's okay. One is, it might look like it, but it's not. And guys, I thought this was a pretty good analogy, because once you know the difference between your rules being met and your rules not being met, what it does is it creates a lot of patience, because all you're doing is you're talking about advantages. You're talking about, man, this is great and that's amazing and this is perfect. How could I not take a trade? Because I've just described a pattern that wins more than it loses. So the first tab is going to help you with that. Second tab are about 400 pictures of you guys being brilliant with the software, and then me stealing them to create a study guide for new users. That's the green section. Being able to identify precisely where the market is most likely to continue. There's your entry sequences. I'm going to give you a very, very solid, mellow, emotionless management plan on the plan that I give you. And this is designed to help you with stop placement and learn how to get paid as a brand new user. But there's a lot of opportunity to manage beyond the very basic. You're going to begin to recognize patterns. These are a lot of the patterns that I recognize each and every day. And then you're going to go to the build your plan, and you're going to start pumping your pictures in here. All of these pictures annotated. This is what I have. This is what I see. This is my perfect setup. This is how I'll manage it. Here's the patterns that I'm seeing. Guys, the more pictures you take, the quicker you're going to get to where you want to be. There's no doubt in my mind. I commit to at least 15 pictures a day. I would encourage you to do the same. Because 15 pictures a day is 300 a month, and that's like 990 days of study. And guys, it's hard to look at the same darn thing 900 times and not become good at it. And then finally, trade tracking. This is your daily, guys. This is your daily journal. And on this one, There's how to annotate for the best feedback. We've already covered that. Pasting into the spreadsheet so that you can get a hyperlink rather than a screencast link. And then what you're going to do is you're going to drop your picture in there. And you're going to talk about the advantages that you saw. Did you have momentum and clear path? Because this is your core. And what you're going to find is that there's a lot more winners associated when these are coupled together than when you're fighting. But you're going to get feedback on everything that you do. It's a private session, guys, and we're going to look at your chart reads, your entries, your exits. We're going to celebrate victories. And you may get a little feedback that says, whoa, I entered on the wrong side of the triggers. I traded into a termination. So you're going to begin to recognize patterns in yourself and the market, things that are bringing you success and things that are hurting that success. If you go back and study this page for 3 to 4 minutes every morning, looking at what you did yesterday, talking about the good stuff, looking at the victories, looking at the challenges, it sets you up for the day because you begin to commit and really focus on the best of the best, and you actually try to avoid the things that are taking success from you. So this recipe has been in place for 20 years. As long as there's been chat rooms with Nexgen, the last 20 years, the fastest way to get to where you want to be has always been post your trades in the room, ask for feedback, and then guys, track your trades, take your pictures, annotate your charts, create that correlation between what you see and what it means to you, and learn the recipe, learn the basic recipe, keep it easy. So we're going to get going. Just a reminder, the first hour is dedicated to rules, how to study it. I will give you everything that you need. The second hour is when I'm going to start clicking those amazing links that you guys are putting in the room. We're going to talk about your chart reads. We're going to talk about your entries. And guys, sometimes I'm going to say, whoa, you got lucky. And sometimes I'm going to say, man, this is perfect. So everything that I say is like your grandmother trying to hold you tight and keep you safe. Just know that. So what are we looking at? I open my workspace. I've got 2 charts, and on both charts I'm going to have trigger lines. I'm going to have small triggers and I'm going to have large triggers. Small triggers are solid lines. There's 2 solid lines that work together to create the small triggers. Large triggers are the dashed lines. 2 lines work together to create the large triggers. When they're going up, they're green, and when they're going down, they're red. It's pretty easy. And we're going to use these trigger lines. They come into play on both charts. The names don't change because it's a different chart. We're going to use them to define momentum initially on a large chart. We're going to use them to identify termination conditions on a large chart. We're going to use them to find precise entries on a smaller, faster chart. And the only thing you have to know about trigger lines is that these are small and these are large. Each chart will have areas. Areas are pretty much horizontal lines on the chart. On the large chart, on the small chart, they have the same name, so we're just naming them. There's divergence highs, which means there was a loss of momentum at a pivot. There's divergence lows, which means there was a loss of momentum at a pivot. There's Fibonacci resistance, Fibonacci support, yellow 1-to-1s in a mid-band. Guys, lines on a large chart are where the large crowd are making decisions, where they're entering, where they're exiting, where they're fighting. This is where reversals can come from. On a small chart, we're going to use the areas to define entries. And the only thing you have to know is the names. You don't have to know how they came to be, where they came from, the settings to make them exist, because Nexgen gives you everything that you need. So we're going to take those indicators and we're going to recognize a pattern that has been proven to win more than it loses. I don't want you guys to take my word for it. I'm going to teach you how to study it. I want you to go prove that this wins more than it loses. And when you do that, when you take that time, guys, to really study this and put the burden of proof on Nexgen, what happens is you begin to trust this pattern and it becomes more difficult for you to avoid it when the rules are true. So, large chart leads the way. We're going to look for that advantage of momentum through strong triggers. So I wake up, I open my chart, and I notice that there's a background color. And guys, if your background color is green, the market's going up. If it's red, it's going down. Your job as a brand new user is to look for trades that are going with the trend. Because in order to have strong triggers, you have to be trading with the trend. So whether it's up or down, the green background lets me know that both small and large must be green for rule 1 to be true. In a red background, both large and small have to be red in order for rule 1 to be true. But rule number 1 isn't color. Rule number 1 is the relationship between these two sets of trigger lines. So in an uptrend, your small triggers are up. They're above the large triggers. The large triggers are widening and the smalls are above. And it's the space created between the two. I want you to picture scissors that have opened up. And as long as those scissors are open, the odds are favorable for the market to continue up. And in a downtrend, smalls are below the large are widening, the scissors open, and as long as that space is there, as long as those scissors are open, the odds are favorable for the market to continue down. So we use the phrase in class OFM, odds favorable momentum. You're going to see it on charts all day long because when you have odds favorable momentum, that's when the market is moving so fast that it's hard to stop on that large chart. That's when it breaks key areas. It covers mistakes that new users make. And when I have strong triggers up or down, those 1 bars seem to sprout tails. And guys, rule number 3 with this look is going to have you pinpointing on a smaller, faster chart exactly where these tails are most likely to form. You'll be able to go back historically and use these tails to study the pattern. But it's kind of cool. And then scissors close. Strong triggers weaken. We call this weak triggers. And weak triggers are when the smalls are inside of the large. And instead of feeling like it's odds favorable strong, it's weak and anything can happen. And you're going to see that annotated on charts. ACH, anything can happen. And it's a reference to the triggers that have gone weak. Because when you have weak triggers, the odds aren't favorable for the market to continue in the direction of the trend. When you have weak triggers, key areas are more likely to hold. When you have weak triggers, you're more likely to get a retracement from the middle of nowhere. So let's go through and, I'm glad that this is showing. So guys, this is sometimes what your chart's going to look like on a Monday morning. I'm glad I have a full class for this. If you ever see this, right click and reload all historical data and it should straighten it out. I'm not going to do it right now because I don't want it to re-up. What I want to do is go to my large chart and I want to make it big. And I want you guys to give me a Y. If you see the separation between the small and the large, if you see how it pushed through the lines, if you see how it carries up, eventually weakness, we get a reversal. And then guys, there's that odds favorable momentum and it's pushing down. And this happens all day. Strong triggers. There's a pullback. I think somebody caught that one this morning. To weak triggers, and that's where the retracement happens. And strong triggers pushes up and weak triggers push down, and there's another one of those tails, another potential entry. So it's important that you commit to the idea that strength is your friend. And I want you to look at your charts, and every time you see one, I want you to say, what is my momentum? Is it odds favorable? Is everything likely to push? Or is it weak? Because anything can happen. And then you can make the decision on which you prefer to trade with. For me, I insist on momentum. I have to have separation in my own personal trading plan. And once I have it, I've got to make sure that I'm not trading into an area that could stop the market. I'm not trading into a termination condition because I want room to my profit targets. And we're just going to call it a clear path. And remember, momentum and path, this is your core. Once these two are committed to memory, once you recognize the looks, there's a lot of opportunities for you. So what's a termination condition? Guys, it's a horizontal line on a large chart. It could stop the market. Blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s, which can be resistance or support depending on the trend. Cyan divergence low lines act as support potentially. Magenta divergence high lines can act as resistance. So all of these areas are where the large crowd are making decisions, guys. You know about them long before you get to them. So I want you to use this recipe to identify a termination condition. Let price reach the area. Let the large crowd on that big chart get to Fibonacci resistance, to 1-to-1s, to a divergence high. Let the large crowd get down to Fibonacci support, to a divergence low, to yellow 1-to-1s. That's the first step in identifying a termination condition. Price reaches the area. And then all you have to do is ask yourself, where are my triggers? If your triggers remain below resistance, resistance is a termination condition. Resistance could create an untradeable bounce. It could create a fight between the buyers and sellers. It could break, or it could reverse the market completely, making your large triggers go from green to red. And if it does this, we're going to call it a strong top. And a strong top is the precursor for the highest probability trend trades you could take. And a strong top is rule number one for you HVA traders and you momentum style traders. So the gist of it, the long and short of it is that if price reaches resistance and the triggers remain below, rule number 2 is not met. No trades into the area. Sit on your hands. Wait for the reaction. And then if price goes all the way down to support and the triggers remain above, it's a termination condition. No trades into the area. It could bounce, they could fight, it could break, it could roll, become a strong bottom. You'll never know what's going to happen, so your best bet is simply no trades into the area. Alexandra says, like this, price reaches resistance and the triggers remain below, so this is perfect. We're not even going to talk about a potential entry. But look at this, price reaches resistance, the triggers don't break, there's your reversal. All the way to Fibonacci support, triggers don't break, there's your reversal. Right to Fibonacci resistance, triggers don't break, there's your reversal. So Alessandro, right here on this picture, I want you to see something. Let me pull it back. And this is everybody. Where you put entry point, and it's that bar. Price reached Fibonacci support. Notice how all the triggers are above? That's a termination condition. This is the one where you can hope it breaks, and it might, but you don't know. That's actually a termination condition. And this one did happen to break, and it broke with momentum. So is there an opportunity there? I don't know. I'd have to see your rules. You didn't write any rules on the chart. What you did is you put entry point. You want me to trade for you. I can't, Alexandro. So, did you have momentum? You did. Did you have a clear path? You did not. So now you have to make a decision. Does this entry point give you enough warm fuzzies to take a shot at it? And if you're talking to yourself in terms of advantages, you'll get to the point to where you can answer that question. But it doesn't fit the rules for a high probability trade because the path wasn't clear. Does that make sense, everybody? And remember, for you brand new users, it's 90% of the day. You're just waiting. So strong tops, strong bottoms, or no triggers through terminations that reverse the market. Guys, your highest chance of success, longevity, comes from being a little bit patient. When price reaches Fibonacci resistance right here, the triggers are still below. And no matter what your opinion is, no matter what you're hoping, no matter what you're wishing, wanting, praying for, guys, you don't know what the reaction's going to be. They never send out a memo. So your highest chance of success will come from waiting to see what the reaction is. And I assure you guys, the market rarely stalls on a line and spends the day there. If it doesn't reverse, it's breaking, which means that everything, your trigger lines are getting above resistance. Once price reaches resistance, we're done with price. Trigger lines tell the story. If your small triggers, both lines, and your large triggers, both lines, get above resistance, well, now resistance is broken. Now it behaves as support. Now your path is clear. And guys, your path remains clear until you hit the next line. This is the high probability, the brand new user scenario. It's either a termination condition or it's a clear path. The second trade on the plan that I gave you is number 2 here. And this is a look where your smalls smash through the area with odds favorable momentum because strong triggers can break areas. Your smalls smash through, but your large are lagging behind a little bit. They haven't quite cleared that resistance. This momentum and that trigger look lets you know that this area has the potential to break. And guys, you can take trades with the potential to break. I'm going to give you a plan to take trades with the potential to break. You'll find that this is the majority of your trend trades. But because that second advantage isn't in place yet, you may have to manage a little assertively. That's what understanding advantages does to you. When you say, I have all three, you don't hesitate. When you see that one is missing, you begin to focus on being a little more assertive in the way you handle your trades. So it's the same going down. And this is what you had, Alexandro. Price reached resistance, the triggers hadn't broken. We pause. And sometimes we pause for 10 minutes and sometimes we pause for half a second. And then it has the potential to break, a lot of opportunity there. And then it's broken. Support becomes resistance. Your path is clear, and your path remains clear until you reach the next area. Is everybody good with that? And I think we saw it. Alessandro's picture was great. Support and the triggers didn't break. Look at that bounce. How awesome is that? Resistance broke, and look how it came back and behaved as support. Resistance broke, and it comes back as support. Oh my gosh, every lesson. Weak triggers gives the retracement, hits resistance. None of the triggers follow. They're all below resistance, and look at that. Big untradeable bounce. We're going to circle this tail. We're going to come back after entries and see if there was a potential entry there. And it looks like that was momentum in a clear path as well. Didn't reach resistance, cleared the previous. That's a potential entry. So what we're doing is we're starting to learn how to study a little bit. Coming through, Alessandro, that was yours. Let's see if there was an opportunity here. Little tail, odds favorable, potential to break. So what we're going to do, guys, is we're going to keep doing this. Look at that bounce from support. We're going to circle these tails. I'm going to show you guys how to study them. But first, I have to give you some bad news. Actually, I think this is great news, but it's going to feel like bad news, new users. There are times when your path isn't clear because your areas are stacked, because it's fib after fib after fib, because it's fib into divergence low into one-to-ones, guys. This, I promise you, is 90% of your day. And it's okay to do nothing because the futures markets trade billions hourly, trillions a day. There's so much money exchanged in these markets. And out of the trillions traded every day, it takes $400 worth of profit to create a six-figure income. True story. If you can find a way to conservatively capture $400 trading away from fibs, using momentum to get to the next fib, guys, $400 a day, shut it down, go play golf, six figures. And that's what the high probability trend trade is focused on. It's teaching you to be patient, to insist on the best of the best. So, is everybody good with the areas? May stop the market, may create an untradeable bounce. It's all right to wait for them to break. Such an important rule, and this is the most broken rule with new users because it does force the patience hand. There's only one other termination condition that I'm going to talk about, and you're going to see this one on a small chart first. It happens on every time frame, but because your small chart is the fastest chart, because inside of this one bar, there's all of these bars, there's this idea of three divergences in the same price range. Three divergences, three cyan lines from a low, three magenta lines from a high. Guys, this is showing you the change. This is giving you a heads up. You can't see that change coming with such a slow, big chart. But three divergences in the same price range says, hey, guess what? We may push the other direction. So this is the only time you're going to let a small chart talk you out of a high probability trend trade. If this is odds favorable and clear path, this is the only look that's going to tell you not to pull the trigger. So if it's not there, we're going to get precise. We're going to be pretty awesome for a minute. Large chart led the way. It's got to. Large chart is going to define momentum through strong triggers. Large chart lets you know there's a clear path. There's nothing there to create a bounce. So guys, with momentum and a clear path, you are a loaded semi going down the highway and it's hard to stop. We're going to turn our attention to the smaller, faster chart, to that refinement chart. And rule number 3 is very precise. You're going to use a limit order to buy or sell a pullback, that fight that the small crowd creates. And you're going to use a limit order to buy or sell a pullback at an area, at a fib, at a mid band, at a yellow 1-to-1, because areas are bouncy. The same way they can stop the market on the large chart, they can create a bounce to continue with the large chart on the small chart. But here's the most important part about defining your entries, is those areas need to be inside of triggers. Because triggers are going to define where that retracement is most likely to go. Triggers are going to define where that push down has the potential to go when everything on your large chart says up. And price returns to triggers. It returns to the large triggers, whether it's the large chart or the small chart. If I open up a large chart right now, you can see how price pulls away from the large triggers and then returns, and then it pulls away. And a lot of times those tails return to large triggers. And you can see it right there. That's a good example. Price accelerates away and returns, accelerates away and returns, accelerates away and returns over and over. So we're going to use that idea, and we're going to put the large triggers from the large chart and the small chart on your entry chart. So you've got the 5-1, they're native. You'll use those to establish momentum the same way you did on a large chart. And then there's the synthetic, the 13-2 large triggers. Those kind of have little steps on them. And all we're going to use these for is to define where the retracement is most likely to go. So if you want to up your accuracy, if you want to increase the precision, if you want to reduce your risk, favorable large triggers is your best look. And I like to share the best of the best for new users. Favorable large triggers means that your large triggers and your synthetic triggers are overlapping, one on top of each other. Two snakes riding piggyback, guys. Put one hand on the desk, put the other hand on top of it. That is favorable large triggers because it gives you the least amount of space where the retracement is most likely to occur. And then when you put in fibs, midbands, or yellow 1-to-1s inside of those triggers, well, you've got the bouncy stuff right in the retracement spot. And guys, this is how we're going to pinpoint entries. This is how you're going to have the least amount of risk, the smallest window of opportunity. So let's do it. In this particular scenario, the large chart's background is green. The momentum is strong and the path is clear. And when it looks like that on the large chart, your small chart is going to be screaming to the upside without you. And you're going to start to be a little fearful. Well, maybe I won't get a trade. How am I going to make money if I can't get in the market? What am I supposed to do? Guys, that's okay. Learn to relax. Because when everything is screaming up, no matter what, almost always the small crowd shows up to fight. So the large chart says up, and the large chart says momentum, and the large chart says clear path. And now your small chart says down, and your brain's going to say, I can't go long anymore. Guys, this is perfect. This is exactly what you want. Wait for the reversal bar, and then define where that retracement's most likely to go, from the top line of the triggers to the bottom line of the triggers. Not to slow the class? Okay, tech fixed it. Awesome, Jerry. That's okay. That's a great message for the class. If you have challenges, let Jason fix them. He can fix almost anything instantly. I'll give you everything I have in my brain, but he's the guy that does it daily. So guys, this white box defines where the retracement is most likely to go. That's it. That's all it is. It's not your entry. Trigger lines are not bouncy. So once we get this range, you're going to identify the areas inside. From the highest point to the lowest point, whether it's a fib, a midband, or a yellow 1-to-1, these are your areas. And if they're inside of triggers, they can create a bounce to continue with the large chart trend, to continue with the large chart momentum. And guys, that big box showing where the retracement is most likely to occur becomes much smaller when you identify where the market is most likely to bounce. Is everybody with me so far? We still haven't even activated a limit order. We're just defining where the small crowd is most likely to fail, where the bounce is most likely to occur. This is where the trust comes in. You're going to activate a limit order 2 ticks above that highest point of support. And you're 2 ticks above the highest point because remember, your large chart is absolutely railing to the upside, and your large chart has a clear path. You're not going to stumble over a couple pennies hoping that it goes to the midband. You're going to make sure that you catch this best of the best, all your advantages trade. And now you've done all you can do. Guys, this is it. That's the end of the road for you. Once that thing is activated, it's up to the market. But if that small crowd pushes it into the retracement zone, more specifically 2 ticks above the highest point of support, you're in a long position. You just entered the market while it was on its way down on that insignificant small chart, because the large chart says up. The large chart says you have strong triggers, so you're in a long position with the advantage of momentum. And there's nothing in the way to stop that market on the large chart, because there were no termination conditions. And you just got in with such precision at the area where the market is most likely to continue. And guys, this is your high probability trend trade. This is your first trade. And you need to be able to identify where the market is most likely to continue, because it defines where the market shouldn't go. So the process is the same up or down. Reversal bar signals the pullback. It's not your entry. You're going to find your trigger line so you know where the pullback's most likely to go, not your entry. You're going to identify the areas within the triggers, and these are the areas that can create a bounce. And we're going to call this, because there's usually more than one line, the window of opportunity. You know, and let's take a picture. Let's vandalize a little bit. You know that price may go all the way to the bottom of the triggers. And you know that price is most likely to bounce from one of those areas inside of the triggers, guys. And that's why it's a window. Because when you study this, you're going to realize that there are times when it blows right through that first bounce point. Maybe it goes to the second point. And you're going to learn to tell yourself, it's cool. I'm still inside of the retracement zone. I'm still inside of the bouncy spots. And then, because you understand why the rules tell you to take trades from areas inside of triggers, you understand that anything beyond those triggers puts the market beyond the retracement zone. And you understand that anything that pushes beyond the areas inside of the triggers pushes beyond the retracement and the bounce zone. And down here, advantages are gone. Rule number 3 is no longer in play. You will never know if, when, or where that market is ever going to continue up. So any line outside of those trigger lines, guys, it is not a part of the window of opportunity. Going down. Reversal bar prints. You can identify where the retracement is most likely to occur in a fraction of a second. You can identify where it's most likely to bounce in that second fraction of a second. And before that second bar even prints, you're going to activate a limit order a tick or two below that lowest point of resistance. And guys, this is a magical day. There's only one line inside of triggers. And this defines where the market is most likely to continue with the trend, where the small crowd is most likely to fail. And you understand that if the small crowd pushes beyond the retracement zone, beyond the areas inside, none of these are a part of the window. None of these are part of the entry. And then I also want you to see that there was a reversal bar and there was an area inside of triggers, but it didn't make it. And guys, this is not your money. This is not the pattern. And look what they did. They came back and they completed the pattern for you. So if you jumped in down here fearful, you probably got run over as it went to the correct entry. So we're learning to trust this one and understand where the market should not go. And that's your initial stop. There's an old saying that mature traders manage their risk before they ever manage their profits. So you will be managing your risk by insisting on strong triggers, because the market's likely to go in the direction you're going with it. You're going to manage your risk by not trading into termination conditions, not trading into something that has been proven to stop forward progress more often than it doesn't. And you are managing your risk by entering where the market is most likely to continue. Guys, this methodology is designed to manage risk before you ever get into the trade. And then once you get into the trade, traditional management starts. And your initial stop will go where the market should not go. 4 to 5 ticks above the trigger lines for a short. 4 to 5 ticks below the trigger lines for a long. And you're going to say, because you trust this pattern, they're going to have to come get me. They're going to have to break through the retracement zone. They're going to have to break through all the areas inside of it, because this is a pattern that wins 70 to 80% of the time, which means 20 to 30% of the time they're going to break through. You're not going to put your stop $500 above it hoping for the best. You're going to say, I will take this loss. It's an acceptable part of a positive equity curve. It's just a cost of doing business, guys. So defining where the market is most likely to continue allows you to have an intelligent management plan. And then there's your pattern. This is exactly what we're looking for. Strong triggers, no termination conditions, and the market is trading way up here and you're feeling left out. And then the small crowd gives you a reversal bar. And many of you panic, but Mark, there's one-to-ones, that's a termination. But terminations happen on the large chart. And then the pullback starts and you're going to see those triggers roll and you're going to say, but Mark, the colors don't match. I don't have momentum. And you have to remember that momentum is defined on the large chart and it hasn't blinked. And you're going to patiently wait for the market to come back to support inside of triggers. And you're going to put your stop where the market shouldn't go. And you're going to realize that up here where you were feeling left out when there was only 80 bucks distance to trouble, by waiting for the perfect entry, your risk was the absolute least. Your profit potential was as big as it could ever get on this trade. Guys, you can go back and study this pattern. You can go back and on those circled tails, man, strong trending. Let's go find a couple of those circles and see if there was an entry. So 9:08 a.m. Let's go see what it looked like on a smaller, faster chart. Reversal bar prints. It may go to these triggers, it may go to those triggers, and it bounces right off of a mid-band inside the range. Do you guys see it? Pretty cool, right? Let's back up. There's another one. Sometimes they don't make it. Sometimes it's freaking perfect. Odds favorable. Does everybody see it? This is what I want you to see. Strong triggers. Price didn't reach resistance. All the triggers broke the previous resistance. And there was a pullback directly to support right inside of triggers. And guys, it never stopped. It just kept going forever. Do you guys see it? That's your pattern. Go study it. There it is again. Odds favorable. Potential to break. Right back to resistance inside of triggers. Two divergences doesn't necessarily kill the trade. It never gets in the danger zone. And down it goes with all that momentum. Pretty awesome, right? So guys, you can go back and study this. Current market. Odds favorable. Potential to break. Do you see it? If it were a clear path, you would activate a limit order 2 ticks below that mid-band inside of triggers. That would be your pre-trade pattern. Is that your 5-1, Lonnie? That's your 13-2? So let's go through the language. Ronnie, thank you for this one, because this is a part of the basics. So price reaches Fibonacci support. Lonnie's small triggers are able to break below support, but his large triggers can't. So Lonnie, this would not be defined as a strong bottom. But what about a second later where it pulls back to support and all the triggers are there? Everything is up. We can say, man, Lonnie, they didn't quite fit the rules here, but I feel good about this one. And when I talk about strong tops and bottoms, guys, I'm talking about everything to the brand new user, to the very basic, to the easiest way to do it. So I'm going to give you this lesson right here, and this will be consistent for new users. In order to be a strong top or bottom, it's a no triggers through termination that reverses the market. So as the brand new user, let it be super simple. Lonnie, you nailed it. It was great. And then, guys, you might say the small triggers broke through a little bit. Lonnie, maybe with this look, you get 3 divergences in the same price range on the smaller, faster chart. And you say, wait a minute, I know the small triggers broke through a little bit, but even my small chart is confirming this termination condition that reversed the market. And you begin to make exceptions based on your chart reading. Does that make sense? Was that the S&P? So, was that another time? There it is, right? Is that it? No. I'm not sure what time that was. But that would be a weak bottom, right? And then these are kind of little transitionals. You could say that that was a strong bottom because it reached support. All the triggers remained above. Termination, it didn't even have time to reverse the market because the large triggers never blinked. That would be a weak top. This would be a weak bottom. That's a weak top. Price reaches support. None of the triggers break through. We're coming from a strong bottom. And that market hasn't stopped until it got weakness in the middle of nowhere. Weak top and pushed down. Weak triggers, pushed up. There's your strong triggers with the potential to break, and it looks something like that. Great question, Lonnie. A lot of movement in the market today. You know, people send me messages all the time. Hey, Mark, the news said the market was volatile. Does that kill you? Hell no. We make money when the market's volatile because we need those patterns to produce, guys. And you need to recognize those patterns, identify those advantages. So this is how you're going to get to where you want to be the fastest. I'm giving you guys the keys to the kingdom. The golden goose. Don't turn it into fried chicken. The goal is that you first look at your large chart. The rules are that you first look at your large chart, that you identify momentum and path. This is your foundation, guys. This is your core. This is the two things that are going to help you find success beyond the very basics. So learn them. And the easiest way to do it is to just take pictures. You guys could take a day and say, you know what? I'm not going to take a trade today. I'm going to go take 100 pictures. I'm going to take 25 pictures each of strong triggers, weak triggers, of a clear path, and a termination condition. And then I'm going to go post those pictures in my spreadsheet, and I'm going to study them until I can tell the difference between the two so I can always enter with the best probability. But guys, the pictures are good. Let me show you what makes a picture amazing. So this is strong triggers. The picture is great. But if I take the time to write, the background is green, the small and large are green, the smalls are above large, this is momentum, this is strong triggers. Rule number one met. The repetition of doing this process, taking the picture and then creating a recipe for what it means to you, creating a repeatable, verifiable, identifiable, you're creating the correlation between brain and advantage, guys. Go through this and do this. And what happens is I still believe it's impossible to take 25 pictures of strong triggers, to go through that annotation and ever confuse them for weak triggers, or to take 25 pictures of a clear path and ever confuse it for a termination condition. And what that does for you is it keeps you speaking in terms of advantages, which means that you're going to say, I have this, let me go define an entry. Or I have this, I don't have this. If I have an entry, let me manage it assertively. So you're going to use this core to know whether you're looking for high probability or medium probability scenarios. And then as you do that, I'm going to give you the high probability trend trade checklist. I promised you everything you need. So is the market coming from a strong top or bottom? On this high probability trend trade checklist, this creates the best of the best scenario. This is not a rule. This creates the best of the best. So there's that same picture. No triggers through. There's your reversal. Now it's a strong top. No triggers through. There's your reversal. Now it's a strong bottom. And I want to show you guys something. If one line of the small triggers gets through, your triggers aren't through. Trigger lines have two lines, and both lines have to be through. Do I have odds favorable momentum on both charts? You only need it on the large chart. Both charts is the best of the best way to take it. And it's always a separation, the colors match. Guys, this is always rule number one met. This is never rule number one met. Use this as you take your pictures, know the difference between the two. No termination conditions. Never taking a trade when it's number one. I'm waiting for number three, smalls and large below, as a brand new user, understanding that visual, understanding the difference between the two, sets me up for my next trade, gives me the opportunity to capitalize even more. and then area inside of favorable large triggers. And I firmly believe that using inside when you annotate a chart is going to keep you out of a lot of trouble. So the second page is the actual checklist. And guys, print this out, put it on your desktop. Miss Trina brilliantly does market replay in her off time to study, and she'll literally pause the market, because you can do that on market replay and make sure that her rules are met, which means that after a couple days of doing that, she knows exactly what the potential of following her plan is. And Trina, has it ever been anything less than spectacular? Because I've never had anybody follow these rules, mark yes to each of them truthfully, and do worse than 70%, guys. It hasn't happened. I've had engineers run it and get in the 82, 83% range. So print this out, put it on your desktop, write these rules on the chart, create that correlation between what you see and what it means to you. And then that takes us to the KISS plan. Told you guys I'd give you a plan. This is it. You'll write your own plan, but this is your first plan. This is your teach you to read the indicators plan. This is the stepping stone in your learning journey. Ron's not in here, but Ron always says, once you can identify a high probability trend trade, once you understand these rules, you'll be able to see the other trades. You'll be able to see the other opportunities. You'll be able to manage the way you're supposed to. So this one is designed to optimize your chances of success with the high probability trend trade. That means this is the best of the best way I know how to get you into this trade. Through simulation, through study, through class feedback, through continuous practice, you'll be empowered to craft a plan tailored to your personal goal based on your experience reading the indicators. Guys, once you can read your charts, you're going to see things. Until you're really good at reading your charts, this gives you a proven plan. It's been proven to win more than it loses. And there's two things that you have to know before you sit down to trade not on simulator. Because you're learning them on simulator, you're practicing, you're creating recognition through repetition on simulator. Don't put the pressure on yourself to be perfect. You need to know why you'll enter a trade. We're defining that in the high probability trend trade. We're describing the pattern that's been proven to win more than it loses. And that's just what the rules are. They're a description of the pattern. And you're going to prove, you're going to go circle those tails and prove that the pattern works. And once you do that, once you trust, you'll never miss the entry. Win, lose, or draw, you will never miss the entry, because you know that for every 10 of them that you take, you're likely to win 7 or 8. Your rules help remove the emotion in trading. They really do. When your rules are met, you don't have to know what's going to happen next, because you know more often than not the result's favorable. And then you have to know why you're going to exit. And that's using that concept of where the market shouldn't go, things that could stop a trend. So if I take a trade, first, my exits are at profit targets. That's the best place for them to go. Or when the advantages that I had to enter the trade have gone away prior to the targets being reached. So if I take a high probability trend trade and it goes 4 or 5 ticks beyond, I'd rather exit than hope. And if I take a high probability trend trade and 3 divergences print in the same range, I'd rather exit than hope. So I'm going to define my entry. We just spent an hour doing that. And then once you're in, you have to manage. This is where you guys pucker pleats into your leather office chairs, guys, because your brain is going to tell you that you have something to lose now. Your brain is going to scream at you to move your stops, to adjust your targets. What if, what if, what if, what if? Guys, your management should be every bit as mechanical as your entry. Your management should be nothing more than if-then as a brand new user, because your brain, your guts, and your fear are going to lie to you. So the management plan and the KISS plan is very pragmatic, and it's based on 2 contracts. That's it. And the KISS management is going to be designed to help you understand and trust stop placement, as well as being focused on getting paid. That seems to be the one thing that new users forget. New users forget that the goal of trading is to make money. And you don't make money until you pull it out of the market. So this is going to help you learn how to do that. You will craft a plan. You'll make your own management plan when you can read the indicators. But until then, it's okay to keep it management or super mechanical. In your management plan, 2 contracts is based on your ability to get in where the market is most likely to continue. So nothing but a series of if-then. If entry, Yeah. Before I take the break, I will, Wayne. Thank you for telling me that. Um, and guys, that goes for everybody. If you have to go to work, um, no worries. Alexandra, I hope they get it all worked out for you. If you need to split, let me know. When we're done with the lessons, I'll move you to the front of the line. So guys, entry is 2 ticks below resistance inside of triggers. Then my initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. And you will know your risk before you ever enter a trade, guys. You will know exactly what you're going to be risking before you ever enter, because you know that your entry is at 34, you know your stop's at 49, you know without question you will have $150 worth of risk on this particular trade. If you're not comfortable with that amount of money, don't take the trade. Because if you try to short it and end up putting a stop below resistance because the number makes you feel good, they're more likely to just get you and split and leave you high and dry with a loser when everyone else took a winner. If you like, well, I won't put it below resistance, but I'm going to keep it in the retracement zone. How many of us have been stopped out in the retracement zone only to watch it do everything the indicator said that it was going to do? Guys, commit to the stop. Remember, you're on simulator. Let it play out. Your targets are 100 and 200. They are predetermined. No reason to move them. We all have, Jerry. Here's the cool thing. If it doesn't hit your stop, you're getting a reversal bar in the direction of your trade. And if a reversal bar prints in the direction of your trade, you're going to redefine where the market should not go. Your new stop is 2 ticks above that reversal bar. You just went from $150 per contract, $300 of risk on this trade, to $30 per contract, $60 of risk on the trade. And I'm going to tell you, as someone that's been trading futures for a long time, my average risk on a trade is between 250 and 300 initially. Sometimes it's 200, sometimes it's 150, but it's not uncommon to have 12, 14 ticks of risk initially. And guys, it'll drop down. Now you've got $30 worth of risk. Targets are the same. And if they don't stop you out for a small loss, that means it goes to your first target. This is my favorite part of trading. If price reaches your first target, one contract is automatically pulled off. You're a winner. You just won. That's success. That gives you confidence. And with one contract remaining, your job is to move your stop to break even. And you now have no risk on the trade, and profits have been taken. And you're doing this because we're learning to believe that the only reason you got into this trade, the only reason to activate that limit order, was because the large chart is going down fast and with nothing in the way, and it's more likely to go to your second target than it isn't. And if it does, it was only $200 away from your perfect entry, which means that that's a $300 trade. And that was only 4 minutes of your trading day, guys. Let that sink in. This was 4 minutes of your trading day. If I watch the market for 8 hours, but I can make this happen 3 times, that's a $900 day. Whoops. And that $300 trade, if that's the best you do every day, is $75,000 a year. And if you take another one, it only gets that $100 and break even. You're in 6 figures, guys. And what happens is that daily profits consistently reached is how you become a professional day trader. It's not the one trade that runs for 1,000. It's not taking every move in the market. It's committing to the best moves, to the highest probability moves. It's learning to get paid, accepting that not every penny in the market is your penny. I took a picture of that this morning from a short trade that I took. This was my only trade this morning. This is the end of it. So I use TradingView because I've got automated zones over there. This is just a plan that John Novak and I have been working on for everybody that's doing the split between the two. And guys, I had a zone right here. And the market went down another 10 points. And I'm okay. That's not my money. Because with odds favorable and the potential to break, I took the trend trade and on one contract made $345 on that trade. And it was just the little move with the highest advantages. And that's what we're doing, guys, is we're learning to commit to the best of the best, learning how to make money, learning how to use the high probability trend trade to do it. So I promised you guys everything you need, and here it comes right now. Take this zip file, put it on your computer, and read it, because it's got the trading goals, and it's got something called exit conditions that'll help you grow a management plan over time. It's got the KISS plan, the high probability trend trade, and then how to optimize your chances of success for the 50-50. It's got the high probability trend trade checklist with the pictures. It's got the chart reading 101. And it's even got the PowerPoint that I use to teach. So all of that is there for you. And guys, that's it for the first hour. That's what we do in the first hour. And we go to the second hour, we're going to start clicking on your pictures. Wayne's got 4 of them, and he's got to leave. And look what Wayne does. Wayne says, check it out, Mark. You say chili dog fail. No momentum. And no momentum is an easy way to lose a momentum trade. And I love that you did that. And guys, this is what you'll do. You'll get to the point to where you learn to speak to yourself in advantages. You'll begin to recognize when they're gone. And even if you make a mistake, you'll be able to come back and go, oh, that's probably why that didn't work, because I lost momentum. And then Wayne, smoking a little hopium on this one, because you got 1 divergence, and then you got 2 divergences, and you still held that trade. And this is a sleepy Sunday night at 8:34. Does that make sense? So not only was it no momentum with the triggers, it was your small chart telling you, dude, we're losing all of it here. That's all right. You've got to do those, because it reminds you that this is your look, right? It reminds you that with momentum and a clear path, even if you just jump in and jump out with profits, that's pretty easy, guys. This is a trade called the chili dog. He calls it the CD. The chili dog. This was designed by a Nexgen user to embrace that core of momentum and path. Find a way to capitalize, to take quick profits, to get to hell out and wait for the next trade. And Wayne, perfect execution on that one. And then here, price reaches resistance, and the large triggers remain a full bar away below that reversal bar marker. And Wayne says, man, price always returns to those large triggers. And if we hit Fibonacci, it's even more likely. And Wayne says, I'm not going to hope that it holds. I'm going to wait for it to start heading down from Fibonacci. I'm going to wait till it gets to the right side of those fast triggers. And Wayne, absolutely perfect. And then using that HVA line for an exit is brilliant. This fights trend. This fights direction. Hell, this fights momentum. But this is a pattern that when you learn to read your indicators, you may be able to capitalize on. And Wayne, I love the entry on the way down instead of catching it on the way up. Great patience. Good job. Chili dog fail. It's gold. I hate the chili dog on gold, but it is what it is. And then it's just another chili dog. You're getting the chili dog after the failure and running it. So they offset. It's a good one. Are you running the 10 tick stop? So you were in at 5.8 and you were stopped out. That's 11 ticks, yeah. It did, Paul. If you scroll up, you'll see that crude oil was pretty split. ES is still on March. Scroll up in the room, you'll see my picture. I'm not sure where it's at right now, but that was pre-market. So the only thing I rolled for the classroom was crude oil. Yeah, that's going to happen in gold every now and then, Wayne. I think you know it well enough. So let me give you a little, one thing I like is if there's a chili dog and it does this, it does the one down, one up, even if it ticks me, I'm back in because the rules are met. Because the sellers tried and failed, and you did it great. Pow, right up to fibs. Nice job. And then you had one more, right? 1 hour of waiting for the rules to be met. How's that for rule number 2, paying dividends? Can't go long, can't go short. Rule number 2 clearly defines a consolidation point, a chop point. Has anyone other than me been absolutely decimated in chop? $1,000, $2,000 worth of opinions? And that's it. They can't break out. And they clearly defined where they need to break out before you're comfortable taking a trade. I love it, Wayne. These are the pictures that pay dividends. These are the not my trade pictures. Great job. Did I get them all, Wayne? We good? Go enjoy your afternoon, sir. We'll see you tomorrow morning, 9 a.m. And then, guys, I'm going to take 5 minutes. I really do think it's important to walk away from your computer every now and then. Whether I take a winner or a loser, I typically stand up and walk away. But what happens is if you sit in front of a computer without your rules met for long enough, most people will try to fabricate a trade. They'll try to, well, it's not perfect, but I'm bored. Let me go ahead and take the trade anyway. And guys, that's a horrible recipe. So I'm going to take 5 minutes. I'm going to stretch my legs. When I come back, we're going to click on the rest of the pictures. Every picture presented in this room will get analysis, and that analysis will cover, I promise, momentum, clear path, and entry. We're going to talk about momentum, path, and entry. That's it. And we're going to celebrate victories, and we're going to identify challenges. Oop, thanks, Mike. I'm not sure your picture went in. And by doing so, we're just going to look for a little consistency. Whoops. I think I've got one built for all the markets. I thought I did. I guess not. If you guys want me to build a market analyzer when I get back, I will. Just know that we're going to talk about those three things. Contract volume on ES contracts is about even. So guys, the only thing I'm going to say about that to everybody is that when the volume is split, all of the driving forces are split. And I just tell people, keep your management hat on. When the volume is split, keep your management hat on, because what happens is there's only half the people driving the market, which means that it's half as difficult to change the market's direction. Something to think about. All right, guys. I'm going to take 5 minutes. When I come back, we'll get into it. Post them if you got them. Ask a million questions. Let's have an awesome second half. See you in a minute. We're going to get into the second half and start clicking on some pictures. So remember, when I click on pictures, I'm not judging you on your trades. I'm not judging you on your ability to follow rules. My job is to help you learn to read your indicators. So I'm going to go back and we're going to talk about the root. We're going to just talk about the advantages. So Bob got us going, doubled up here. I love it. And then Bob says, hey, check it out. It's a weak top. It's a reversal that isn't coming, that isn't coming from a termination condition. It's just a weak top. And he says, check it out. Odds favorable momentum. Separation between the small and large. And then Bob, we're going to talk language real quick. Bob says, Mark, I've got a clear path. But then he says, anything can happen. Smalls break, large still above. So Bob, this is language, and that's all it is. It's not a clear path. When I have odds favorable and all of my triggers break, that's my clear path. And that's the one that sets me off. And I'm like, man, I've got 66% of the amazing going on. All I have to do is find an entry. And I'm not even worried about management too much. But when I have anything can happen triggers, well, that's weak triggers. And we certainly don't have that. You put ACH to identify that 50-50 look, that potential to break look. And the only reason that I bring language up is because if I see this is one management plan, but if it's actually a 50-50, it's just a different management plan. And guys, you can call it whatever you want. And Bob, I'll learn your language. And it's funny because I was like this, like, I'm not knocking you on the language. If you're consistent with it, cool. If you know that when you say anything can happen, you're still managing, then who cares what you call it, right? It's the old Winnie the Pooh. It's the heffalump. It's an elephant, but they call it a heffalump. It's still an elephant. Anyway, odds favorable, potential to break, no divergence, perfect entry, easy money down to the fibs. This is such a beautiful trade, Bob. And I'm sorry I had to mar it with the language thing. But guys, look at this. Best momentum ever, potential to break, didn't sacrifice any momentum on the small chart. Beautiful low risk entry and easy profits. Over $500 on a 2 lot. I love it. And guys, you'll find that I use language to help identify troubles, to put the management hat on if need be. Second trade on this look. There was your first one. Everything comes down, hits the fibs, and you say, I don't have to trade into a fib. I'll let it break. Smalls and large break, and it's not the best momentum, but now the path is clear. The entry is clearly defined. Bob takes it and rides that one down to the next fib. Beautiful. Do you guys see how by speaking the advantages, when Bob had momentum in an area, he was willing to take it and manage. When Bob had clear path in an area, he was willing to take it and manage. He knew 33% of the good stuff was gone, but it doesn't mean that it's the end of the opportunity, because with a clearly defined entry, smart, tight management, clear path, he pulls it off. Bob, I love both of your trades. Nicely done. And you're thinking about termination conditions, and I like that. And then we got one more for Bob. Odds favorable, and then back to potential to break, right? Best momentum ever, potential to break, not a clear path, perfect entry, all the way up to the fibs. And you even called it a 50-50. So you knew, Bob. You know that 50-50 and ACH for you now are synonymous. And now I know that 50-50 and ACH are synonymous, which means correct it or don't. It doesn't matter. I'm learning your language. Still a great trade. Beautiful trade. Because it was a strong bottom, just made it easy. Love it. All right. And then Bob some more. Bob, you're busy. Weak top. Odds favorable. And it was the potential to break on the way down. You take the pullback, and it's easy money. Great trade. Well, his smalls were through. His large were not. Cav, you would be trading directly into the fib. He traded to the fib. Big difference. He had room to profit targets, as long as that actually broke. And then the next one. Let's see. Not a clear path. Train track momentum, which means that we're in a strong trending market. So odds favorable. Clear path. Didn't hit the fib yet. Pulled back to support inside of triggers. And you got paid. So let me read everything. And let me show you something, Bob. You ready? Your trade is right here. Let me change the color of my arrows so we don't get them confused. This is your trade right here, Bob. Right? I just want to make sure that I'm consistent. That doesn't apply. That doesn't apply. Right? So I like that these are chart reads, but those are below the pink line. These don't even matter anymore up here. So what did you have getting into it? And again, I like the chart read. Doesn't apply to the trade. Despite the three divergences. Doesn't apply to the trade. The trade's up here, right? So what did you take, Bob? You had a clear path. You had momentum. You had an entry inside of triggers. So we're going to change this. It's not Bob's butt trade. It's Bob's high probability trend trade. Do you see it, Bob? You let the nastiness down here convince you that you might have made a mistake up here. You let the weak bottom down here. You let the not a clear path down here. You let the three divergences down here make you feel like that wasn't the best of the best. That's a rock star, high probability. The only thing outside of the normal look is that you've got the train track momentum. So for all of you in class, when the market gives you 30 plus bars in the same direction, we call that a strong trending market. And in a strong trending market, you'll notice that the small ride the back end of the large, and you'll see that little train track. You'll see the dashes of the large. This look, because of the strong trending market, lets you know that rule number one is met, because it's a strong trending off to the races market. So everything is absolutely perfect on this trade, Bob. 100%. Great job. And one of my favorite things is when you guys post in the room and you're ready for a beating, and I get to tell you that it was perfect. Alexandra, we answered that one. Jerry, we saw yours. Boaz, I bet you this one's momentum and path. Good top, lots of momentum. Everything says down with the potential to break. Pull back to resistance inside of triggers. Out at potential trouble. Great job. Awesome trade, Boaz. Momentum with the potential to break. Great entry. Never gets out of the triggers. Out at trouble. And then Boaz, the only thing I can say about this, and I know that you have a management plan, right? And I'm not trying to change your plan. I like that for one contract, right? And you're trading one contract. Let me show you what the great thing about two contracts is, guys, especially if you're on sim and you're working on a management plan is you take the medium probability trend trade, your entry is perfect, you take one contract off at trouble, and then that second contract could have easily been held to the next key Fibonacci area. And it's this little bit right here. So on the NASDAQ, that was from, I don't know, 49 to 43.6, $180 on the second contract, on top of what you made there. Does that make sense, Boaz? Are you listening? Does that make sense to everybody? One of the reasons we suggest simulating on 2 contracts is so you learn how to hold that second contract. Let me show you something cool. That's an extra 32 grand. Well, it's even more because it's the area from here to here as well. But it's like that addition. And I like using it because what it does is, guys, it begins to develop trust on the large chart look. And it begins to develop trust because when you take this exit, every indicator on every chart agrees with the direction, with the momentum, with the path, everything. It's actually finally gotten perfect. And there's just no reason nothing changed. So maybe as you grow, as you move to that next management phase, that's one of the reasons why 2 contracts is so important. And when I started trading, I only traded 1, and my brother used to beat me up every day. Dude, why are you only trading 1 contract? He's like, you're killing yourself on learning how to manage. And he was right. Once I went to 2, I began to recognize management things a little better. And then, Alexandro, can we revisit this one? And so I'm going to do 2 things here. First of all, I'm going to remind you guys that I don't need March 13th to read this trade. And I don't need all of these. And I'm assuming, Alessandro, you've got 2 monitors and you've got large and small separated between the 2, right? So I'm getting this giant picture. Just so you guys know that have that set up, when you open your Snagit or your Capture, it's okay to not show me everything, and it gives me a more clear picture, and I don't have to go back and look at everything that happened on Friday and have, you know, a picture that's 8 yards wide. That's me being nitpicky, and it makes it easier to show 2 charts next to each other as well, and they're big enough. So check this out. Strong top, everything rolls, but it's a termination condition. I have momentum, I'm coming from a strong top, and I have an area right inside of triggers. So Alexandro, this may be a trade later, and let me show you something too. When you have a termination, the small triggers roll. In 2004, Nexgen taught users, this is your sell. When it pulls back to the small triggers, and it looks just like this. So you were actually onto something that you didn't even recognize. It's not a high probability trend trade, but it's one of those coming up next in life trades. And then Morgan, when everything is up and nothing is in the way, you find a way to capitalize. Great job. And I love that you dedicate all your successful chili dogs to Ron. Does everybody see the momentum? Does everybody see the path? Once you understand this, there's a lot of ways to capitalize. And Morgan did it perfect with one of those chili dog trades. That's a gift from one of our users. And then Lonnie, I just wish, guys, if you have to leave, give me more than a 30-second head up because I want to talk about it. I want to see what you're doing. So, strong triggers, enters perfectly, but it is into a termination condition. Exits at trouble, I like it. Takes the second entry with the potential to break, and exits trouble. So Lonnie, I hope you're listening to this on the video. Great job. And then Boaz, not a great bottom. This is a weak bottom from the middle of nowhere, Boaz. I want to make sure you get this lesson. This is a weak bottom. It's not coming from a term. It blew through the previous term. Does everybody get that? That's a weak bottom. And when you have a weak bottom, these 50-50s are less likely to work. And this one didn't. One divergence is rough. You take the perfect entry and you get paid. That second divergence is what killed it. And I'm telling you guys, if you learn that weak bottom, strong bottom idea, rule number one for that 50-50 trade, rule number one for that potential to break trade, guys, it's a strong top or a bottom. And when you don't have it, again, let me go back and show just one of my no trade pictures. Man, Boaz, there's close, and then there is 6 ticks off. You wanted to call that close because it sets you up for a better opportunity here. 1 to 2 ticks, Boaz, absolutely. I will defend you all day long. Because we know that fibs come from tens of thousands of calculations. 1 to 2 tick, all day long. 4 to 6 ticks, it's just too far. The fibs are too good. Look at that, to the tick. And I took that same picture this morning. Why I didn't take the short trade into the mid-band? Because it was a bad top. The mid-band's just more likely to create a bounce, even if it's not a permanent bounce. And when there's fibs around it, it's even more likely. But perfect entry, smart management, all day long. I love the trade. But I want to make sure that we're clear on the difference between a strong top or bottom, because you need that strong top or bottom for a lot of trades beyond the high probability trend trade. Morgan, failed chili dog into a trend trade on the next pullback. So, Morgan, do you see how you broke the rules on the chili dog? What do you see directly in your way on a small chart? There's a line. Lines are bouncy. You got tired of waiting, traded directly into it, and it punished you. But it punished you to the perfect trend trade. If you weren't so busy licking your wounds, you might have caught that one, right? But that's okay. It's how quickly you recover will define where you're at in your trading. But then it's perfect, and you don't hesitate, and it's beautiful, and you're able to make money, but you're still a little chicken because you took a loser. Why would you exit that trade? Why would you pull both contracts out when everything is going right for you? And I love this. I gave the entry 2 more ticks than normal. I increased my risk and reduced my profits because I formed the opinion that it wouldn't retrace all the way. I changed my plan in the moment because of my opinion, and it took 2 ticks away from me in the trade. Those 2 ticks would have been nice. You might have actually held. And thank you for posting that. It wasn't a disaster. You turned mistakes into money. And you didn't hold forever on this one, which I like. It's a small loss. But guys, this is what's going to happen. And Morgan, you showed this perfectly. When you break your rules, your brain doesn't say, I broke my rules. Your brain says, shit, I just lost. And you miss the perfect trade. And then when you take the perfect trade again, you turn it into the less than perfect trade by getting in too soon. You turn it into the less than perfect trade by exiting too soon. Because of what happened back here. Guys, get your face out of the rearview mirror. Trust me on this one. Every trade is individual, and your results are an accumulation of 20 to 25 trades, not just one. You're going to take losers. I was talking to my buddy. I was up in Dallas over the weekend. I'm talking to my buddy that trades. And I was like, how was your week? And he goes, I had a great week. He goes, I was net, I think it was up $3,000 or something on the week. And all he takes is chili dogs. He goes, man, but I had a couple losing days. And he said it in this sad, beaten dog voice. And I'm like, man, losing days happen. Losers happen. But if you're consistent with your plan, $3,000 weeks don't suck, guys. That's what, $12,000 a month? That's not so bad. So it's okay. Don't change your plan because of a loser, I guess is where I'm saying there. You've proven that your plan's a good one. You've proven that your plan wins more than it loses. You've proven that your stops make sense. You've proven that your targets are good. Don't adjust it because of one loser. That's what the market wants you to do. The terrorists win. Trend trade checklist. Is the market coming from a strong top or bottom? You said yes. Did you have odds favorable momentum on both charts? Second one you did. Not on this one, but we were in that acceleration phase. No terminations 2 times. Looks good. Pull back to areas. Beautiful. Beautiful. 3 divergences for the exit. Absolutely gorgeous. But Joel, you recognized that we're accelerating left and trying to break above. And when everything else is perfect, give it a go, right? There's virtually no risk. Beautiful, beautiful chart. All right, Bob B. You guys love that look, right? Bob B, strong bottom. Why? Because price reached yellow 1-to-1s. Every trigger was above. It created a reversal. That's the strongest bottom ever. That is a heavy squatting bottom, Bob. You're in the acceleration phase. Not quite odds favorable. But from a strong bottom, I love that look. No divergence, perfect entry. Money, money. Great job, Bob. Awesome picture. Boaz, everything's down. It has the potential to break. It pulls back to resistance right and started triggers. And you ride it all the way down because there's absolutely nothing in the way. Boaz, perfect. And I like this exit. It means that you are looking for trouble spots for exits. Beautiful trade. Isn't that awesome, guys? Welcome to futures trading. Let's make money short. No, let's make money long. No, let's make it multiple times. Hold on. Let's go short and do it. No, wait, let's do this entry because of momentum and path. There's a million ways to do it both directions. You guys are finding all of them today. Ah, Miss Trina. You put your links one on top of the other. That's okay. We're going to rectify that. You've got to put spaces in between links. I've done that too. That's okay. I'm a trained professional. We've got this. Oh my gosh. Trina, talk to me about your stop. Why did you get in so far up? Odds favorable, clear path, strong bottom. I know it's entry. Did you notice that you didn't write why? Did you notice that you put entry? You didn't put entry at an area inside of triggers. And guys, this is what happens when you go from practice to a moving market. And Trina, it didn't get your entry down here and it started back up and you jumped in, didn't you? There is no reversal bar. You didn't get a reversal bar until down here. So you are anticipating it. So Trina, what you're doing is you're trying to Wayne it right now. You're trying to do what Wayne does without Wayne's experience. Does that make sense? It's normal. You could have entered at the 1-to-1s. That would have been acceptable. You knew where your stops go. This would have been a rules-based entry. The mid band is the low end of the window. It didn't get below. So either way, you're good. And you know that. And that's what I really want to stress is that you know where the market shouldn't go. And all you did is you robbed yourself of a lot of profit. Big difference between the two. Great trade still though, Trina. This is common. That's why if I'm going to do this entry, or I like this entry, Trina, trying to do that half bar trickery that Wayne does, why not do it from the lowest area instead of the highest area? Because your entry's mid bar on the reversal bar. Hell, you might as well just jump in on the up bars and keep your stop way down here. Does that make sense? I love it. Timing. People don't understand that. Timing takes practice. The fact that you know where the market should not go is buying you a lot of forgiveness as you work through timing. Great job, Miss Trina. I told you guys, all I need is a couple pictures and I'll know exactly what you're doing. All right, 2 small winners using my rules of targets and stops. So went long, got paid, out break even. Went long, got paid, out break even. So even on a 50-50 that fails, Paul's able to get paid. Yeah, Bob, you guys did. And you all took it differently, didn't you? Everybody did it a little different. That's what I like. You're finding your groove. So Paul will tell you that he has a proprietary trading plan. He's not going to tell you what it is. He's not going to tell you that he had a strong bottom, that he had odds favorable, that it had the potential to break, that there wasn't divergence, that he enters at the highest area because there's no divergence, that he takes quick profits because it's only medium probability. But when it comes back, he's like, nothing's changed. I'll take it again. I already made $100. He makes another $100 and then out. Is this next? I'm not sure what you're asking. So you've got 2 different markets in your data series. Get rid of one of them, Alessandro. Do you want it to be gold or do you want it to be crude? Which market are you building? Okay, so highlight GC. Highlight GC, hold on. And you need to remove it. Because what it's doing is your NinjaTrader right now is trying to apply data from 2 different markets. So highlight GC and go hit the remove button and then apply, and that'll probably fix what ails you. But you don't have a template up either. So make sure you put a template in there as well. Make sure tick replay is done as well. Or if you want, you can let Jason do it for you and it'll be perfect. Because right now, you're working on repetition. So tick replay gets hit. Make sure you have your template, and you can only run 1 market's worth of data on a chart. Let's see what happens if we try to run 2. I'm going to set it up like yours. Well, I don't have it. So I'll put GF. So watch this. If I do that and apply, let's see what happens. It's all sorts of nonsense. So I have to highlight the second one and remove it, and then when I click apply, we're back to all the goodness that we were hoping for. Let me know if that helps. We made it. You're welcome. We made it through all of them, Better Dad. Did I miss one? Did you post one that I missed? So, Better Dad, if you have 20 pictures, drop them at the beginning of class. And then I know what I'm in for. No, it's okay, but sometimes if you have like 20 plus, I'll break them up. Instead of going 20 pictures of Better Dads when there's other pictures in the room, I'll do like 5, 5, 5, 5, go through, and I'll know to do that. I had to do that on the day that Wayne had 77. So you're not even close to Wayne, and don't be sorry, you're fine. I just want to make sure that, and I don't have any more pictures, so I'd be thankful for your 20 right now. Just want to make sure. Is that the one you guys took? That sure is pretty, isn't it? And look at that. Blah, 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 blah. The indecision comes in, but they still haven't broken below support with all the triggers above. Might be a lesson there. All right. I'm excited. I like that we have 20 pictures. Some of you are like, can he post 20 pictures? The answer is without hesitation, hell yeah. Post them all. And guys, you should be thankful because that's 20 lessons you guys get for free that aren't posting pictures. So, good stuff. Did everybody have a good weekend? While we wait, while there's no questions, while there's no pictures, while I don't have rules met, you guys have a good weekend? Have some fun, do some things? What's our chart read? Our chart read is I don't have momentum. I have a clear path up, but I don't have a clear path down. And I'm not even close to areas inside of favorable large triggers. Now I've got support, mid-band, large triggers a full bar away. There's your gap theory. The gap theory says that if these large triggers are above that reversal bar marker, price may close the gap to the large triggers. There is a really good chance, especially because it's a bad top, that it may suck right back up to those triggers. This is what identifies your mid-band as a termination condition. Is it guaranteed to go? No. But between the termination and the gap, it is a no short trade scenario. Look at the NASDAQ. Wow. Resistance, didn't break divergence, didn't break divergence. 3 divergences in the same price range, and the market rockets down. Pretty cool, right? Bad top, straight to the mid-band, large triggers a full bar away. Very often the market continues up to the key area. We're not the only people that know about these areas. The large crowd knows about them. Overrun, back to the mid-band, support, 3 divergences, but they push down anyway. That's why NASDAQ is not for new users. NASDAQ is crazy. Crazy. How those 20 pictures coming, Better Dad? Are you annotating them or they? There we go. That's what I'm talking about. Let's see what we have. You know what? Just so I don't miss them. All right. Dun, dun, dun. Odds favorable momentum? Yes. Clear path? Yes. I love that. Got in. Got your 100. Out break even. KISS plan. Take care, Cav. And then nothing changes. So you take it again. I love it. And it goes the distance. Better Dad. This is perfect. Does everybody see that? His plan says take the perfect entry, make $100, go break even. When it pulls back to the mid-band inside of triggers, absolutely nothing changes over here. And Better Dad says, oh my gosh, my rules are still met. Let me get in. Let me put my stop where the market shouldn't go. $100, break even, goes to 200. Better Dad, that's amazing trading. Nice job. That's solid. I like that. He double dipped. He made $200 at the exact same price range. Heads up trading. All right. Odds favorable down here for sure, right? Definitely a strong bottom. So guys, you've got to get out of the habit of saying, I had strong triggers, I had a clear path, when your trade isn't anywhere near the advantages you're pointing out, right? You might as well say, I had strong triggers over here. So Better Dad, that's no longer in play. The smalls have reached, gone back inside the large. Your clear path is no longer in play. There's a fib. Does that make sense? So what do we actually have? No, this is why we post. You have weak triggers, you have no clear path, and you have two divergences on your entry chart. You take the first one, and it works out nice. One divergence, almost there, looks good. And then when that second divergence prints, that's your get the hell out. Does that make sense? Because now you don't have a clear path. You're losing momentum everywhere. The odds are no longer favorable. This second divergence is an awesome, awesome exit condition. But if you're working on the assumption that you still have a clear path, you don't manage it as aggressively as you should. Another great picture. That's okay, because when you take great entries, it makes it easier. And I love these pictures. There's a million lessons in them, guys. Odds favorable, clear path, in on the wrong side. Oh, you took it before the fib, not the mid band. Why did you put again? Are you hanging on to past trauma? Why? Did you follow your rules? Let me ask you that. Well, first of all, you're trading the Dow on a Sunday. What did you expect to happen when the market's closed? Remember, guys, it takes a little volatility to make things go. But check it out. Perfect, perfect, perfect. Your stop should have been right there, 2 ticks above that reversal bar. Does that make sense, Better Dad? That's the KISS plan. That could have been a much smaller loss. These are market replay from Friday? Right on. Oh, YM replay. I got you. 2 ticks. It's 4 to 5 ticks beyond. And then once you get a reversal bar, you can redefine where the risk is. 2 ticks above it. So maybe a little smaller one. I love this though. You took the perfect trade. Things that I don't know. I don't trade the Dow. I don't know the characteristics of the Dow. I'm not sure. I do see that you got run over on the gap theory. Price reaches a mid-band, large triggers. Not a lot of Dow traders. Oh, and there it is right there. So, Better Dad, here's your study. I don't know. I just don't know anything about the Dow, how it works. You're learning its patterns, but check it out. Weak top, odds favorable, How do you, so this is where you have to, this is where the analysis went wrong. Price reaches the mid-band, even if you don't see the fib print yet, because it wasn't there. If your large triggers are a full bar away, better dad, that's the gap theory. And it's that gap theory. Price reaches the mid-band, large triggers are a full bar away. That's what defines the mid-band as a termination condition. Does that make sense? That's the one where if you hit it and those large triggers are above the reversal bar marker, it's more likely to suck back and close that gap. And that's exactly what happens. So without the clear path, and look at the distance in the, does it, I don't know what the, gosh, I don't even know what the point value is on the Dow. Is it 5 points a tick? Is that right? Five a tick. So that's about 33 ticks, 150, $300 trade. That's a huge amount of risk. And that's at 5. That's a $600 risk on any other market. So gap theory is a good study here. And there's got to be a point where you say, this entry sucks. Let me at least force a reversal bar so I don't have to put $300 on this trade. Does that make sense? This entry is so hard to define. This entry it's just bleh. And you'll get that with repetition. If my entry is so erratic that it gives me that much risk, it's okay to force a reversal bar. Good stuff. Missed this one, replay being too fast. We've all done it, but it's absolutely perfect. Odds favorable, clear path, easy money all the way to the fib. That's one of the things about replay. All right, odds favorable, clear path? No, not a clear path. Oh my gosh, that's your stop out from down here. Going way too fast, right, Better Dad? Odds favorable, clear path, perfect entry, reversal bar to reduce risk. You missed the reduction. Could have been a small loser. And it went huge. Playing back a little too fast. Guys, when you think, so if you think you see an entry coming up, pause it and then slow it. Take your entry, run it, have fun, right? Perfect entry, first profit target, break even. Nicely done. Odds favorable, clear path. Better Dad, I'm going to let you in on a secret with me. I do well on market replay 1 out of every 20 times because I know that I can fast forward, and because I know I can fast forward, I trade stupid. I trade stupid. But if you noticed, and this is maybe a good thing, Better Dad, you're in a bad mental state. Why? Well, because a lot of times you're moving, you're not giving yourself time to do the right thing. This is odds favorable, this is momentum, but because it's a bad bottom, you have to be a little aware. And again, that's a lot of risk. It's a good trade. It's a great looking trade. Beautiful large chart, perfect entry, first target, break even. So why did you get stopped out here? Better Dad, perfect entry. There's your reversal bar to move your stop, and you get stopped out at the high tick. Why? That's not your plan, is it? $53? No, because your entry was 51. Unless you got slipped. But your entry was 51. Slipped? Okay. That happens then. You're following your plan. Weak bottom, huge gap, not quite. Enter 2 ticks above. And then you got your bounce, and it was great. And you're just like, oh my gosh, F these guys, they better go. Multiple divergences, everything rolls. Better Dad, I think maybe your market replay is doing more harm than good. Because you're putting huge risk on trades. And you're not paying attention, right? You didn't go break even. Does that make sense? I could see how you could get into bad mental space. And one of the things, S&P, crude oil. Why does Mark teach on S&P and crude oil? Because those are smooth. Because they flow. Because they're good. Because they build confidence. Just because you can trade any market with this software doesn't mean you should. They aren't bullies. That's a good way to put it. That's okay. That's awesome, Better Dad. But you don't know if you don't try, right? You don't know NASDAQ's too fast for you if you don't try to trade the NASDAQ. You don't know that gold's a temperamental bitch if you don't try to trade gold. So, Better Dad, I'm not knocking you for doing it. I think it's great. It's all in the name of research. But here you're just not even trading your plan, right? Potential to break, multiple divergences, momentum, and you just jump in. And I'm not going to ignore it because you recognize that this didn't break. You recognize that everything changed on the small chart. You recognize that you're on the good side of the triggers, and you just took advantage of momentum from a termination condition. I actually like this trade, but I do know that it's not a part of your plan. NASDAQ pre-market is good from 6 to 8:30. I agree 100%, Boaz. I agree 100%. And it is very tradable after lunch as well. All right, momentum, clear path. Strong triggers, entry 67.42. When blue fib printed, took the money at the fib. On the pullback, not there. All right, so Jerry, you're trying to do the chili dog, right? Cool. So the rules for the chili dog say let the back of the bar get below trouble on either chart, Jerry. Because look, see the two tails that printed? That's that line creating a bounce. Look how it did it here. So you're still in the danger zone. Let it get below, and then Jerry, trust it, man. That's a panic stop. So from 43 to 32, that's your $110. Get in, get out. You know it's not a home run. You don't even get close to the next bouncy thing. It's great. Your reads are great, and the trade gets easier the more you do it. Keep posting them. We'll talk about all of it. I'll annoy the hell out of you, and we'll get you set. Hey, Trina, have a good one. Thank you for posting. Boaz, top has 3 down bars, not perfect, not good, great momentum. It's directly into a termination condition. You get in on the wrong side of the triggers, and you hold until divergence prints. So Boaz, a little unorthodox. You don't have odds favorable momentum. You don't have a clear path. You don't have areas inside of triggers, right? What is it? It's everything says down, so you go down from the fib. Hope it works. And it did. Does that make sense, Boaz? I can't find a high probability trend trade rule, Matt. But you certainly played the odds. Everything says down. I'm going to try to go down with it. Nicely done. All right, guys, I'm going to take 5 minutes. When I come back, Better Dad, we'll get back into yours. Good stuff today. Great stuff today. So I'll be back in just a couple minutes, guys. When I come back, we'll finish up. Post them if you got them. Ask a million questions. I'll see you in a minute. Here we go, last hour. Love the last hour. Well, since Better Dad split, I am without pictures. So let's see what we have going on. Let's do some live chart reads. Crude oil currently does not have odds favorable momentum. It does have a clear path, but it doesn't have areas inside of favorable large triggers, which means I'm missing 2/3 of the advantages. You'll have to make the decision on whether or not that's a trade you want to take. 2, 3, 4, 5. All right, let's get the next ones. I love a good bottom, Paul. It just got weird. Strong top. I mean, just awesome. Fibs. Odds favorable. Clear path. Entry makes sense. You held it. You held it. You added on. Made money. Oh, nope, that was your first one. And then did it get you break even? It did. And then you re-entered and you make 100 and 200. I like it. Large chart leads the way, better dad, the whole time. I love that you got paid. Nothing changed and you held it. Get paid, out break even, and you say, wait a minute, this is still the trade. Let me re-enter. And did it. Great job. Heads up. Odds favorable, clear path. Wait here for entry. Get owned. Oh, lose the negativity, better dad. You didn't get owned. You took the perfect trade from the right spot with a good stop. You're trading a pattern that has been proven to win more than it loses. Just because something wins more than it loses doesn't mean that it doesn't lose. That's a beautiful trade, and that's acceptable losses. Nicely done. You did not get owned. Just didn't work. And that's why you re-entered with confirmation. Because it is perfect. They just decided to push lower. And you get it on the way up and you get it all back. That's amazing, better dad. Finally. $10.14. So it is 6:14 in the morning in Spokane, Washington. And you've already got $150 profit. Finally. Odds favorable. Potential to break. The entry should have been here. Why are you entering on the way down here? Not trading your plan. And that's playback again. You're not trading your plan. It's either too fast, you hesitated, took the fib, but you didn't. If you were taking the fib, you would have taken it on the way up. So let's go through. I want to say this real quick. I like language. That's not what I wanted to do. We're going to do a wise. No, we're going to do a wise. Well, you said enter 2 ticks below the fib, which leads me to believe, better dad, that you weren't waiting for confirmation. You think 2 ticks below the fibs is safe. So why do we trade on the way up? Because we expect an area inside of triggers to create a bounce. Does that make sense, everybody? Why do we get in on the way up? Because we expect one of these areas to create a bounce. And that's why the stop goes here. So if it's already blown through the fib and it's already back down, that fib isn't creating a bounce. That fib got run the fudge over, right? Your midband got run over. But what didn't happen? It didn't really get outside of the retracement zone. So better dad, 2 ticks below the fib isn't a safer entry. Does that make sense? All you did was increase risk. No, it didn't clear trouble. Trouble is defined on the large chart. This is your potential to break area down here. And it didn't. You had a 50-50 here, and then that printed, and it became 50-50 here. And one divergence is bad, and two divergence is worse, and three divergence is freaking death. But you still held it. So not only did your large chart have the potential to break, not a clear path, but your small chart had a termination. Does that make sense? A lot went wrong with this. Yeah, you got lucky. I'm okay saying you got lucky. Great picture. Awesome conversation. All right, those two are the same. And you're going to get just where you want to be. If you spend the time with all this annotation, all this good stuff, man, you're going to get right to where you want to be. There's no doubt. All right, 50-50 trade. So what's rule number one for a 50-50 trade? New users. What's going to give you the highest chance of success? Strong bottom. One of the other things that it says on that KISS plan, Better Dad, is one area not broken. You've got 1, 2, 3 areas that you're hoping break. So not only is it not a strong bottom, it's a huge, you're trying to get all of these areas broken. You're already losing momentum. You entered above the fib. The fib vanished. It did a little update on you. So I'm stealing this from Pineski in the room. If my large chart isn't perfect, but I want the trade, I'll force the market to get me in at the lowest, least amount of risk spot. And this is something that Paul does really well, guys. If he says it's not a strong bottom, there's a lot of areas. Divergence printed. He goes, I know the market is likely to bounce somewhere in here, but I don't care. They're going to have to give me the low risk entry. They're going to have to give me the lowest entry. They're going to have to give me the most room to get back to trouble. Does that make sense, Better Dad? This is a progression that's going to come in time. It may not be there yet. You're still taking the right entries. But I'm telling you, there's so much more potential with your ability to read these charts already. There's a lot of potential in there. This is a great trade. It's a good looking trade. You pulled it off nice. Weak bottom, odds favorable, 50-50. There's your entry. Huge risk. Directly one tick off a fib. Momentum got you there. No divergence, strong triggers. Take the shot. Get paid. Nicely done. Potential to break. Nice entry. Quick profits. Divergences have got to be your exit condition. 3 divergences in the same price range, Better Dad, may terminate a trend. That's 2 times we gave a lot back. Does that make sense? Large chart's done its part. So 50-50 is bad, 50-50 is worse, 50-50 is, it's not even 50-50 anymore. It's directly into a termination. Great stuff. There's the 50-50. There's the strong bottom. That's the first one you took that really has the best chance of success. But look what happened. This was your entry. I love this picture. This was your entry, right? 2 ticks above the 1-to-1 inside of triggers. That was your first profit target, easily. You took the second entry after the fib held and gave a lot more back. And so on a high probability trend trade, I love the second chance entries. I do. On a medium probability trade, you'll start thinking about it. I hope this area breaks. What does that tell you? When it hits the area to the tick and starts back down. that area is probably not going to break. Does that make sense? And so, Better Dad, you're at the point where we're going to start talking about a little next level because you're getting there. You know where these trades come from, and now you're just getting the repetition to be able to manage them a little more aggressively. But that's the whole idea on these, is these get managed aggressively. You're doing awesome. And I love that. Paul just gave you a little too. Keep coming back and post every picture you took, regardless of wins or loses. Paul knows. Paul used to come to my classroom, Better Dad, and do exactly what you did. 20 pictures, all of them annotated, tons of questions. Directly into a mid-band with the large triggers a full bar away, and it ran you right over. So, Better Dad, there's the gap theory again, and we've all done that. Accidental sell. It's nice when it works out. See how it closed the gap back to the triggers, Better Dad? That's when the mid-band is a don't trade into it. You'll start to see this pattern more and more. And that's the one termination condition that's harder to recognize as a new user. And it looks a lot like that too. Because you get caught in the moment. There it is again. Mid-band area. I think that is the last one that becomes second nature. So don't worry. You'll get there. What I had to do, Better Dad, is if it is the first trend trade in a new direction, like this one, right, comes off of support, this is my first trend trade in a new direction. My brother told me just no matter where it is, look for the gap. If it's the first trend trade in a new direction, look for the gap. It may or may not be there, but at least it's always on your brain. That was good advice from my brother a long time ago. Odds favorable, clear path. I love your entry. You held it. You made money. I like it. Why didn't you put you're not doing the first stop movement, are you? You're letting it go to your first target before you move your stops? I don't disagree with it. That's where most people go with their management. Because it's still a high probability trend trade. I love it. Great job. All right, 3 more. Boom, boom, boom. Whoops. You guys remember when I said there's no momentum in flat triggers? That's a tough one. That's a 50-50 without large triggers wide. You get in on the way down, little confirmation bar. I like that you still got it. Careful with that look. That's not a big momentum look, especially into a mid-band, especially from a bad top. Gap theory again. There's your third gap theory. So now we're recognizing a pattern. Something for you to study. And then this is just beautiful. Odds favorable, clear path. Get in, get paid, get out. Get in, get paid, get paid. Once again, beautiful. And this was today, right? This was live, Better Dad. You're simulating live. That's not replay. I'm being nosy. So you're up $600 today. Third week with the software. And the cool thing is think about this, Better Dad. There were 1 or 2 avoidable losers that you'll avoid. There were a couple able to manage more assertively moments. And because you're keeping it simple, even with mistakes, you're doing great. You're up 1,000. Now you're just bragging. I love it. And man, if I can do it, if we can take a pedestal real quick and throw somebody on it, Better Dad, you have, without question or hesitation, embraced this. You learned the rules, you broke them down, you kept them simple. You're simulating, you're posting everything in the room, you're accepting feedback. Are you tracking? Are you coming back and looking at them? So you're following the plan and you're getting the results. That's hard to do. Most people fight it. For an hour each morning, re-listen to class at night. I love it. Your wife is going to be sick of my voice. I met a client once, went over to his house when I was up in Dallas, and his wife goes, I know that voice. I listen to you every day. And I was like, that's weird. Kind of cool. All right. I love it, though, because it can be done, guys. It can be done. Paul, directly into a termination condition, but from a strong bottom. And I like this. Wait at the bottom of the window or no trade. So, Better Dad, when it's not perfect, Paul says the only way I'll take this trade is with the least amount of risk possible. He's got momentum. He doesn't have a clear path, but he's willing to take it. And that's exactly what happened, is he gets in at the bottom. Stop makes sense, low risk, and he makes it. So it's kind of cool. Once you begin to understand, once you start saying, this isn't perfect, this isn't ideal, this isn't exactly what I want, let me force the market to give me something. Let me force the market. And then, Paul, did you take the P&L off of there so you wouldn't stare at it during a trade? I like that. Because a lot of people look at these numbers and start to panic. Good stuff. And yeah, Better Dad, or Paul, most of his trades were market replay today. He gave me about 20 market replay pictures. Better Dad's on it. He's following the path 100%. 100%. And finding success already. Joel. All right, taking the short. Joel, you know I love it when you guys put why. So why did you go short into a fib with the large triggers a full bar away? Was it because of the strong top? Cool. So Joel, I know you don't post a lot in this room. I'm a huge fan. Tell me why. And it's not just for me. When you annotate a chart, when you talk about what's going on, when you talk about your advantages, when you identify your challenges, what you're doing is you're making it repeatable, and you're showing me your chart reads. And if you give me this, I can help if you need help. That's the whole idea behind posting in the room. If you give me this, I don't know if you hoped it would go down. I don't know if you were wishing it would go down. I don't know if you recognize this as a termination condition. I don't know why you got in between the two. Does that make sense? Sometimes people are like, stupid Mark, just, that means good, right? But I want it to be repeatable for you guys. I want you guys to be able to do the same thing over and over. There's that gap theory again, guys. Look at it. Weak triggers. We even said it. No areas inside. No reason to take a short. No reason to go long into a mid band. Now it closes the gap. Now we can start talking about it again. So guys, I definitely appreciate the whys. Paul up a grand. Look at that. PA funded. Funded. Great job, Paul. And then one to get busy on. Are you using a copier, Paul? No. I found a free one. Hold on. Oh, you have Replicano. Okay, cool. Then never mind. Good stuff, though. Only use it to pass assessments when trading PA? Oh, that's smart. I like it. So, Joel, I like it, man. If you're going to take a shot, stops in the right spot. Strong top suggests, and you know that, right? So you're playing the odds. With everything pointing down, market's more likely to go down than up. You know where trouble is. Good stuff. And then, Better Dad, there's another one for your pictures for the gap theory. I mean, that's textbook. Well, I don't know what your rules are, Joel. What kind of trade were you trying to take? Were you taking, I know I'm up against stuff, but I'm going to do it anyway trade? Well, I know it was a short, right? So let me do it this way. How do I repeat this trade, Joel? If you were going to teach me this trade, what would you tell me? Would you just tell me go short? Or would you say, when price reaches resistance and it reverses the market, when my smalls get below the large and I have momentum, I'll play the odds. I'll trade into a termination condition, which is exactly what you did. But I'll put my stop above the synthetics. Does that make sense? So I don't know that you got lucky. I think it's a pretty good look, to be honest with you. I think this is a better look because that trades to trouble instead of back into trouble, if that makes sense. So the Ys aren't for me. The Ys are so you can repeat this. How'd it turn out? Did you make money? And I'm not beating you up, Joel. I like it. Okay, so how do you repeat it? That's why I ask for the Ys. Joel, you found a pattern that was good. It made you some money. Wouldn't it suck if you took a knock to the noggin tonight and you forgot what you did here, you looked at it and nothing made sense? You want to be able to repeat it. That's all. I like the trade, though. Steve Diego, and Better Dad, some people will tell you it's great, and some people will tell you it's absolute garbage and puts you in positions you didn't want to be in. I found, see if I can find it on my desktop. I believe it was this one. Simple trade copier. Steve, we'll get right back to yours. Yeah, so guys, that zip file that I just put in there, you have to run the Ninja script to do it, bring it in. But there's a simple trade copier. It's written in, it's Ninja script, it's just an add-in. It was absolutely free. My buddy uses it, and he's had no problems with it. But you can go through and turn your copier on and go to your indicators, and I can pick all of my accounts, and it's absolutely free. I don't recommend it. I'm not saying do it, but I'm saying that if you're looking for a copier and you want to try one out, he's had 0 challenges with it. Make your own decisions. It's there in the room for you. And it's free. And free is amazing. All right, Steve Diego. So strong piggyback triggers, 30 plus bars, strong trending market, clear path, cleared trouble, held it, bought the mid band, and made your money. So Steve knows the old adage, when you have a strong trending market and absolutely nothing in the way, buy the mid band until it stops working, and it lets Steve sit through 3 divergences. Little outside of the box, but a nice trade. Odds favorable, back of the bar, almost cleared, easy money. Ron's Chili Dog. When you got momentum and path, you'll find a way. Great job, Steve. Same thing, other direction. When you have momentum and path, you'll find a way. And Steve, you've just gotten in the habit, you trust momentum and path so much, you sit through the pullbacks and make it work. Nicely done. Good stuff, guys. Right on. Paul, I like it when you're helpful. Paul's got a lot of experience, ladies and gentlemen. It's already 11:40. Holy smokes. How'd that happen? How are we looking here? Odds favorable. Potential to break. Not from a strong bottom. Already have divergence. I don't have a plan that fits that one. Weak bottom. Directly into a mid band. Large triggers a full bar away. So is that gap theory on both of them? Oh. There's the gap theory on crude. There's the gap theory on the ES. Yes, Paul. Did you check your messages, Alessandro? What's your ticket number? You can't put LOL when you come complain in the classroom. Did you check your messages? Because once you put it, he doesn't call you. He typically gets you through Discord. What was your ticket number? Let me see if I can help. $23.73. 1, 2, 3. You've got 3 people in front of you. So I'm looking at his lineup. There's 3 people in front of you. So depending on what's broken on their computers, are you still just trying to set up workspaces? I know you had to call NinjaTrader. So, okay, so check it out. From your NinjaTrader control panel, maybe I can help you out. You should have workspaces here, right? So what happens when you try to open one? Have you modified them to the point, like gone through, broke them? Because I did that all the time. Let me show you an easy fix. Are you computer savvy at least a little bit? Cool. This will be this will be easy for you. Whoops. I'm going to go to the software guide here. Alessandro, it'll take you about 8 minutes to do a full rebuild. So this link will show you how to delete all your workspaces and everything, delete your templates, but it doesn't delete your software. And then what you'll do is after you do that, those are the instructions that I just dropped in the room. You'll just rerun your indicators and it'll put everything back to factory stock. This is like the reset button. So all your workspaces will be exactly the way they're supposed to be coming from Nexgen. Nothing will be overlapped. Everything will be checked the way it needs to be checked. All the I's are dotted and the T's are crossed. So That's a good one because I play with my workspaces a lot and I move stuff around a lot and I change it for classroom. So every week I do this. Your indicators don't get deleted, only the workspaces. So it's just a fresh start and you may want to give that a go. But it takes me about 5 minutes to completely redo it and then about another 5 minutes to set my charts up the way I want them. And then if you break something, you're in line, so Jason will get on and fix it. But that's a good one. When things start to go sideways, sometimes a rebuild isn't a bad idea. And I would click on your ticket and see if I could help with it, but I don't know. I don't want to mess up Jason. I hope that's helpful. I do hope that's helpful. I love the gap theory, guys. And now I've got 3 divergences in the same price range. Okay. So this is still missing a template. And you need your tick replay. Tell me what you're asking, though. Are you trying to build new charts? Well, it just rolled. So crude oil is going to be 525. We were 425. So there's your problem. There we go. Figured it out. You're 2 contracts back. So it needs to either be May or June at this point. And I believe May. But you should still be able to have. Just open your workspace. And you can just type it right in. So up top, click on this and change April to May. Under the drop down, you can just change it. It should still open with March. And if I'm not mistaken, March is still running. No, because it was April. So March is just too far back. So open your workspace and it's not going to come up. Go to this drop down. And you can just type it in, but make it crude oil 05-25. And I think that's going to fix what ails you. I'm with you now. Yeah, so we've been in the April contract for the last 30 days. The March contract is expired and non-existent. And that's why it's not going to open up for you. But that one should. April 25 should have opened up for you. So for example, this is the May contract, but if I go to the April contract, it still loads up. And it looks almost exactly the same. A lot more fibs, because there's a lot more history. And then here we go. It's going to force me to do it. So CL0425, I'll double click. And I'll get my little cursor thingy up there. I'll get rid of the 4. I'll change it to a 5 and just hit enter. And it'll reload that new contract. But check your messages and see if Jason sent you a message. There you go. Bingo bango. I could be a tech guy. That's perfect. I love it. I think it just took me a second to get to what you needed. Yeah, no worries. So do the same thing on your small chart so that they match. But yeah, rock star, dude. I'm telling you guys, I am the least technical guy you will ever meet in your life, but I've done all of this so often. I've done so much of this just over the last 5 years that you will become a tech person. You'll start to recognize things. You'll begin to see how to do stuff, and all the little things that you needed tech for in the beginning, you don't. Um, and now you can trade. Now you can follow rules. See how I did that? It's what I do. Now you can follow